BEP is a stock I used to own in 2020 and into 2021. However, the stock continued to run faster than its underlying fundamentals were growing, and therefore, it became extremely expensive, and I decided to sell my position. The stock has now fallen significantly and is down 58% from its all-time highs. But what's interesting is this business has continued to grow its revenues and EBITDA to all-time highs, and its dividend has also continued to grow consistently. In fact, its dividend yield is now approaching 7%, and the company is projecting to continue growing its dividend by around 10% annually over the next 5 to 10 years. This has led many people to ask me what my views are on the stock today, and if it is now looking cheap. So in today's video, I want to answer your questions, share my research, and what I think about BEP stock today. With that being said, let's hop into the video and start off by discussing what BEP actually does. BEP, or Brookfield Renewable Partners, is a global company focused on buying, owning, and operating renewable power assets. Their business primarily involves generating electricity from renewable sources such as hydroelectric, wind, solar, energy storage facilities, and nuclear power. They manage a diversified portfolio across various regions, aiming to provide stable, sustainable returns through long-term power purchase agreements. BEP is a global leader in renewable energy, and it operates across 5 different continents with a total of $104 billion worth of renewable power assets. 47% of the company's FFO, which is essentially its profits, comes from hydro, but the other areas of the business have been growing very quickly, as we are going to see later on in the video. 58% of its profits also come from the United States, 21% from Latin America, 17% from Europe, and 4% from Asia. So the business's profits are diversified through their renewable power technology and the diversification across the planet. On this next slide, Brookfield Renewable says electricity demand is growing with digitalization and the proliferation of AI, in addition to broader electrification. Global data center power demand is projected to grow by 15x from 2022 to 2030. AI is driving a step change in data consumption. Computing power and energy are on the critical path for data, and data center power demand is growing from 2% of global power consumption to almost 10% by 2030 and up to 20% in the United States. So AI and compute is causing massive increases in demand for electricity. And BEP is one of the companies that's working with data companies to provide them with clean power. In fact, Amazon, Meta, Microsoft, and Google are all customers of Brookfield Renewables. These businesses are all focused on renewable energy as well. In May of 2024, Brookfield Renewables signed a massive deal with Microsoft. And in this article it says, Brookfield and Microsoft collaborating to deliver over 10.5 gigawatts of new renewable power capacity globally. First of its kind global framework agreement will accelerate the expansion of renewable energy capacity to contribute to Microsoft's sustainable goals. And at the bottom here, it says that Microsoft's goal of having 100% of its electricity consumption 100% of the time matched by zero carbon energy purchases by 2030. So basically, Microsoft wants 100% of its electricity consumption to be renewable by 2030. And Brookfield Renewables is one of the major companies that they are partnering with to meet their own goals. So let's go back to BEP's investor presentation. And here they say that 90% of their cash flows are on 13-year contracts. 70% of the revenue is also linked to inflation, so Brookfield Renewables can increase its revenues and cash flows directly with inflation, which essentially means that this business is inflation hedged. It also has above 70% gross margins on its power businesses, and it is well diversified, with no single market accounting for more than 10% of the company's cash flows. The company also shows us that its FFO per share has compounded at 12% since 2016. And its dividend has compounded at 6% since 2001. So it is very much so a dividend growth stock with a very high going-in yield of near 7% today. So now let's go and take a look at BEP's most recent quarterly results from its third quarter earnings. And here we can see that revenue in the third quarter was up 24.7% year over year. FFO is also up 10%, and FFO per share is up 11%. Now, the FFO payout ratio here is 86%, or in other words, the dividend is 86% of the company's profits. So then the question is, why is the stock down when everything seems to be going just fine for Brookfield Renewables? and its revenues, its EBITDA, its FFO, and its dividend are all continuing to grow. So I did some digging online to try and figure this out because not just Brookfield Renewables, but basically every single renewable energy stock is down significantly. And right here, this article says that Trump says he wants no wind farms built during his presidency. And in general, Trump does not seem very bullish or optimistic on the renewable power industry, and he instead wants to continue investing and building out oil and gas and essentially fossil fuel power. However, I then found different articles saying that Trump is not really going to impact the renewable energy industry. And this article right here makes a very good case. So this says, clean energy's resilience in the United States. Texas is really interesting. A state that is the freest market, which doesn't have an ideological lean towards renewables, has the most renewables in the United States because they're cheap and because they know how to get stuff done. Even as Trump declares drill baby drill, renewables have been becoming the default choice for new energy projects, even in the United States. In 2023, nearly 90% of new global power capacity came from clean energy sources, such as solar, offshore and onshore wind, and geothermal power. In the US, in the same year, renewables accounted for more than 75% of new power capacity, a trend likely to continue even as fossil fuels may see a temporary boost from rising global energy consumption. So Texas, which is a state that doesn't have an ideological leaning towards renewables, has been building out a ton of renewable energy due to how cheap renewables have become. Another article says this momentum is reflected in global investment trends. In 2023, investments in solar energy were $286 billion and surpassed investments in oil production, which were $200 billion for the first time. So in the year of 2023, there was more money invested in solar energy globally than oil production. And again, this is simply because of how cheap solar energy has become. This next paragraph says, solar power's plummeting costs underscore why renewables are economically irresistible for investors. According to Our World in Data, from 2009 to 2019, the cost of solar fell by 89%, while coal prices stagnated. As solar continues its exponential growth in cost competitiveness, fossil fuels will struggle to match its affordability and scalability. Then I also found this chart right here, which shows us the cost per 100 megawatt hours of different power sources. And here we can see that solar and wind have continued to become cheaper and cheaper. And as of 2023, they were significantly cheaper than both coal and fossil fuels. And out to 2030, it is projected that both wind and solar power will continue to become cheaper and cheaper. And this right here is why so many different nations across the world are continuing to invest in solar and wind power instead of fossil fuels. Now, they are still investing in coal and fossil fuels, but solar and wind are definitely playing a major role and seeing much more investment, at least as of 2023. I then went over to Brookfield Renewable's most recent Q3 2024 conference call transcript, and to nobody's surprise, the first analyst question was asking the CEO and the company what they thought about the new Trump administration coming in and if the company was going to be impacted by Republicans, essentially. So here's what was said in the most recent transcript. The analyst asked,
I want to start with the U.S. It's a big part of your advanced organic pipeline. And Connor, you referenced comfort that growth will remain a growth focus for Brookfield Renewable. I'm wondering, though, if you can give us more detailed thoughts on the U.S. return profile and growth potential of tax credits are changed or repealed in the event that the Republicans take the House and Trump can advance that agenda.
Great. Good morning, Sean. Certainly, no doubt a big topic this week. Maybe let's come at this two different ways. We'll come at it from the macro, and then we'll come at it from the perspective of our business in particular. From the macro perspective, we would suggest that the government support and regulatory processes and procedures that most commonly touch our business generally have very strong bipartisan support. And yes, while a new government may tweak or make changes to that, our expectation is it would not be material. However, what's probably more important from the macro side is two things. One, anytime a new administration comes in, and this one we expect to be no different, we expect to see a period of tremendous fiscal support to drive industry and manufacturing and data centers in the United States. And all those things are going to need incremental power. And that's going to be very beneficial for renewables. That's going to be beneficial for gas. That's going to be beneficial for nuclear. Further, a Republican administration with a focus on domestic growth should no doubt provide longer-term tailwinds that will increase power demand, which again, renewables as the lowest cost provider of that power should be well positioned to benefit from that incremental demand.
So the CEO of BEP is saying that renewable energy is cheaper than fossil fuels now. So the economics and customer demand is for renewable energy to continue being built out. And with Republicans being so bullish on building out the US economy and building out US data centers, it may actually increase renewable energy demand, which is kind of funny. Then the CEO says,
now maybe then switching gears to talk about our business. For years now, we've been growing and diversifying our business. We're proud that we have one of, if not the most globally diversified renewables business across both geographies and technologies. But in particular, for years, we've been positioning our business to rely on corporate demand and low-cost energy production, not government subsidy, to ensure that in periods of regulatory uncertainty, our business will continue to perform. Today, our business is highly focused in both the lowest cost technologies and the regions that are seeing the greatest growth in electricity demand, which ensures that we are largely insulated from any potential regulatory or subsidy changes. And therefore, we don't expect the recent election results to change our business model, our growth outlook, or the return profile we will seek to achieve when deploying capital into growth. Maybe just to finish by putting it bluntly, we are the low-cost producer of a critical commodity that the world, particularly the United States, is going to need more of. And therefore, we feel that our position is very strong, particularly as we move forward and see more growth in the United States.
So what's interesting about this piece from the transcript is that it's the corporations leading the renewable energy push, not the government. And the US and the world definitely needs more power to continue progressing tech and the revolution of AI. And Brookfield Renewables is one of the companies providing this power. This next slide comes from Brookfield Renewable's recent Investor Day presentation, where they give us their 5 and 10-year outlook. And here they say, we have better visibility than ever in achieving our target FFO per unit growth over the next 5 years and beyond. And here, BEP is saying that they are expecting to continue growing their FFO per share by 10% annually over the next 5 years. And over the next 10 years, they believe that they can continue to grow their FFO per share by 10%. So the business is basically projecting that they are going to grow their profits per share by 10% annually over the next decade. All right, so now let's head back over to Stock Unlock and take a look at some of BEP's different KPIs here. Because what's really interesting is historically, BEP was mostly a hydroelectric utility provider. And a long time ago, I believe all the way back in like 2012, the vast majority of their business was in hydroelectricity, or essentially hydro dams. However, over the past decade, BEP has been investing significant amounts of capital into solar, distributed energy, wind, and their sustainable solutions segment of the business. And just so everyone knows, BEP's sustainable solutions segment includes investments in carbon capture and storage, biofuel production, advanced recycling, nuclear services, and solar panel manufacturing, among others. So the sustainable solutions portion of their business is kind of like a conglomerate of different new technology that they are working on. And heading back over to Stock Unlock, we can see that their hydroelectric revenue has only compounded by about 4.6% annually since 2020. Whereas their wind revenue has compounded at 12%, their solar revenue has compounded at 23%, distributed energy and energy storage services has compounded at 11.4%, and their sustainable solutions is a brand new business essentially, but it is growing extremely quickly. But overall, we can see that Brookfield Renewables is continuing to grow its other business units that are not hydroelectric, or it is continuing to diversify away from its hydroelectric business. And the other business segments, especially solar, are growing extremely quickly. So now let's head over to Stock Unlock's freeform tool, and I want to compare Brookfield Renewable versus NEP, which is NextEra Energy Partners, and in my opinion, is one of the most popular renewable energy companies in the stock market. And since 2016, we can actually see that NextEra Energy Partners has not seen its EBITDA grow at all. However, Brookfield Renewables has seen its EBITDA compound by 13.7% over the same time. BEP's revenue has also compounded by 11.4% versus NextEra Energy's 3.3% over the past about 9 years now. So what this is suggesting is that BEP is actually growing both its EBITDA and its revenues by a significantly faster rate than NextEra Energy Partners, which again, I think is one of the most popular renewable energy stocks in the entire market. So now let's get rid of NEP, and what I want to do is take a look at BEP's historical price to EBITDA ratio, which has been the most consistent price ratio for this business. And the EBITDA for this business has also been one of the most consistent metrics as well. So right now we can see that BEP is trading for 1.8 times EBITDA, and the company's long-term average has been 3.35, and its median has been 3.08. So BEP has seen significant multiple compression over the past 9 years, and it's selling for its lowest price to EBITDA over the past 9 years as well. And here we can also see that in 2020, BEP's price to EBITDA got all the way up to 10. And again, this is when I was thinking that the stock was looking quite expensive and I exited my position. However, the price ratio has now declined by over 90% to only 1.8. So BEP has seen massive multiple compression as its share price has fallen by roughly 60%, and its EBITDA has continued to grow significantly. If we just take a look right here, we can see that the company's EBITDA is up massively and is continuing to grow and hit all-time highs. So again, the share price falling by 60% at the same time as the EBITDA has grown over 100% has led to massive multiple compression on this business. So now let's head over to Stock Unlock's discounted cash flow calculator and use BEP's EBITDA over the next 5 years. And we're going to say that EBITDA is going to compound at 10% annually because BEP is expecting its FFO per share or its profits per share to grow at 10% annually. So I think that this is fair. The company has also recently been buying back shares, but on our DCF, I'm going to say that they're not going to buy back any shares over the next 5 years, and they're going to grow their dividend at about 6% annually, which I think they could actually outperform this metric. We're also going to say that BEP is going to trade for 2.5 times EBITDA, which is below the company's historical averages. And with all of these metrics right here, we get a compounded annual growth rate to shareholder value of about 24%. This is a very high compounded annual growth rate to shareholder value, and this does factor in the total dividends paid over the next 5 years as well. So BEP, in my opinion, is looking extremely cheap in the market right now, and it's looking like it could offer some pretty high returns going forward. Because think about it, this business is offering a 7% dividend yield on cost right now, so the share price only needs to grow by 3% annually to produce a 10% compounded annual growth rate. And with the stock selling for a decade-low price multiple and the business projecting 10% annual profit growth, I think that there could be a case for multiple expansion over the next 5 years, in addition to actual profit per share growth, which could lead to some pretty significant returns on this stock. So again, I think that this business is looking extremely cheap right now, especially if they can actually meet their 5 and 10-year outlook of continuing to compound the profits at 10% annually. So then the question becomes, how does BEP look versus BN, which is the largest position in my portfolio? So I ran a quick DCF on BN as well. This is the same DCF that I have done on my channel previously. And if BN hits their 5-year growth targets, then the stock could still compound at roughly 22% annually. So there's actually a case right now that BEP could produce higher returns over the next 5 years than BN. So then the question is, why don't I sell my BN and go and buy BEP? And the main reason is because BEP is a dividend-focused investment. It's an income stock. So the majority of the company's returns are probably going to come from dividend payments, and dividends are taxed. So the actual return to BEP, when you factor in taxes on dividends, is probably going to be lower than BN. And the strategies of these businesses are completely different. BN is focused on reinvesting its profits back into future growth, whereas BEP pays out the vast majority of its profits, about 86% of its profits, in the form of a dividend. So I think that BEP is more for income investors, and BN is better for growth investors such as myself. And therefore, I'm not really looking to sell my BN and put it into BEP. And in general, I just have significantly higher convictions on BN as well. And the stock, in my opinion, could still deliver similar returns. And when you factor in tax, I think that it will still produce higher returns going forward. But with all that being said, BEP is definitely looking interesting in the market right now, especially with that 7% dividend yield going in and 10% projected annual dividend growth and cash flow growth over the next 5 to 10 years. So I think that BEP is undervalued in the market. It's got great management. It's a Brookfield stock, and Brookfield is one of the best companies in the world, in my opinion. It's selling for record low price ratios. It's still projecting very strong outlooks. It's also outperforming its peers, and it seems like the market is just extremely bearish on renewable stocks right now. But if you can find the highest quality renewable stocks in that industry, then you can find potential undervalued stocks and high quality businesses. And BEP is one of those, and it's one that I am seriously taking a look at. So those are my updated thoughts on BEP right now. I definitely think that it is looking cheap, and I do think that it will outperform the S&P going forward. So I hope that you all enjoyed, and if you did enjoy this video, then please remember to leave a like on it. And if you're interested in joining my Patreon community and supporting my channel, and also getting access to my Discord community where I've already discussed BEP and BN, getting access to multiple deep dive videos, which are in-depth stock analysis videos that are all over an hour long, and just so much more content from me, then again, consider checking out my Patreon. It's only $15 a month. People have been absolutely loving it and saying that it is the best investment they have ever made. So seriously, check it out. So check out my Patreon and consider subscribing to my channel if you want to see more. But with all that being said, thank you all so much for tuning in to today's video, and I hope to see you all again in my next one.